Markets are falling ahead of the Fed meeting, with the S&P down nearly 2% Monday and gold up almost 0.5%. Joining me today is Erik Norland. He's executive director and senior economist over at CME Group. Erik, welcome back to the show.
Thank you for having me.
So obviously everyone is talking about the Fed this week. How do you see it, Erik? Are you more hawkish or dovish right now?
Well, I think you have to be somewhat hawkish. Look, we have extraordinarily strong labor growth, 313,000 jobs last month, average hourly earnings growing at 2.6% year on year, 4.1% unemployment. This is a Fed that is obviously going to raise rates on Wednesday. There's, I think, really no question about that, or almost no question. But I think that they'll be preparing the markets for several more increases this year, which are already more or less priced into Fed funds future.
You know, Erik, some analysts I've spoken to are already predicting a recession for 2019. What are your thoughts on this? You know, the yield curve is still positive, but could it start inverting after this week's Fed meeting?
It will not invert after this week's Fed meeting, no. At the moment, we still have about 130 basis point steepness between 3-month and 30 years. And so even if the Fed hikes several more times this year, the yield curve probably won't be at flat even by the end of the year. It would probably require even more rate hikes next year, which by the way, the Fed has signaled to the markets that they plan to do to bring the yield curve to flat. And then once the yield curve actually goes flat, it probably won't be for another 12, maybe 18 months after that we experience a recession. So the recession will almost certainly not be in 2018, probably not in 2019, but maybe more likely in 2020 or 2021.
So, bringing this back to gold now, Erik, how do you see the role gold is playing? And should investors be overweight gold in the current environment?
Right. Well, I think gold has performed extraordinarily well, given the tremendous pricing of rate hikes that has undertaken the markets over the last few months. For example, in early December, the market really did not believe that the Fed was going to hike rates 3 times this year. Now the market is fully pricing that. Normally, when the market goes from not pricing rate hikes to suddenly pricing rate hikes, that's very, very bad news for gold. And as you know, gold has actually held its own pretty well. It may be trading down a little bit today, but it's not much different today than it was, say, a month, 2, 3 months ago. So I think gold is actually showing an extraordinary amount of strength. And the reason for that may have to do with the weakness of the US dollar. Normally, when you have increasing interest rate expectations, that would be very bullish for the dollar, and the dollar has not rallied. And I think the reason for that is that we have this complete fiscal breakdown in Washington, D.C., where not only are they cutting taxes, but they're increasing spending. So we're having an explosion of the U.S. budget deficit, which is dragging the dollar downward and keeping gold prices level despite having higher interest rates forecast for the near future.
And just looking at silver now, Erik, silver net shorts are near record highs. What could be causing such a bearish sentiment here?
Yeah, that's a good question. I don't really know exactly what's causing such bearish sentiment on silver. Silver has underperformed gold for many years. If you look at the gold-silver ratio, gold prices have been doing better than silver for the most part over the last decade or so. A lot of that has to do with the death of photography. But the good news is photography can only die one time. So now that most of that demand has been eliminated, I just don't really see what the downside is for silver. I'm actually thinking that silver looks relatively attractive compared to gold. So I'm a little surprised that so many people are short it, but I don't know precisely what their motivations are.
Erik, thank you so much for your thoughts today. We'll speak soon.
Thank you.